Welcome to the kingdom, guys. Welcome to the crypto kingdom. This is London. We want to go ahead and just pull up some basics. First of all, guys, Dogecoin. We had a pre-launch party earlier on this morning. It was yesterday actually, but we got in and we wanted to say, like, before it launched, we wanted to go ahead and say it was going to launch, and sure enough, it did decide to make a move up, the move that we were anticipating that it would make, and that's it. We appreciate you guys tuning back in. I looked at some other live streams today, and there are people who are watching the price of Dogecoin. I think it's pretty incredible. I'm not sure that they're trading at all. They're actually just watching the price of Dogecoin. I think that's very interesting because we are watching the price, we're actually trading. So I'm not sure about the other channels. We would like to support everybody. Say congratulations, you guys who are doing the other channels. That's very nice. And let's take a look at Dogecoin in terms of kind of where things are looking. We have essentially escalated, about 20% in price. That's a nice little bump in price. I wanted just to bring, some degree of a, an update to you. And the update is just in the form of, we had talked about essentially the pump that you would have to the upside at some point. We said there would be a takeoff, and sure enough, it's achieved a positive price action. Let's kind of zoom out and just get an overall feel for what's going on. As we look at kind of post-retracement, you guys will recall we got up to about 45 cents. That was within the last week and a half, I'd like to say. Let's look at that exactly. When was that date? In and around the 19th of April, it hit that second peak, and the 16th of April, it hit the 45 cent mark. We're currently in and around the, let's pull this up here, the looks like 35 cents, almost 36 cents. Excuse me. So as we look at this recent price action and what's going on, Dogecoin is attempting to just kind of build that staircase and walk it on up. It has done that successfully since our original stream. This morning, you guys know, we had a pre-launch party. So I don't know how much of a launch this is, but we definitely have some positive price action. We'll get in there and measure that. And yeah, the inclination was correct. We had this number 1 right here, and we thought it would go ahead and step up. We still think it'll step up, and then I said let's say towards number 2, and we anticipate that will still be the case. So that is good news for all of you holders. Everyone who's trading, who accumulated in this area, you've made some money. There should be some people, I guess everybody in the crowd, that has done well. We had a rocket ship here. I'm not sure that's really rocket ship worthy. We were thinking maybe we would, see like a 40 or 50%. Maybe this isn't done. I would anticipate as Bitcoin looks to push back towards its all-time high, in and around that 64,000, that we would get some more positive price action on Dogecoin. So we do appreciate all our loyal subscribers, you guys who are tuning back in. Thank you so much for being here. We watched some of the other live streams tonight. It was very interesting. I'll say interesting, kind of entertaining. They're looking at the price in a very detailed manner, and I don't think they're trading at all. I'm not sure that they're actual traders. So we are actual traders. We enter on price targets, and we like to exit in specific to specific degrees, etc., and reaccumulate at lower prices. We believe in the retracement theory, and so we are, currently having looked at accumulated here at a heavy amount, and looking at a decent exit up at the top. It looks like we are, in and around that kind of that peak. Would you like, it's your threshold in terms of your profit taking or what your risk, to some it's not going to, let's say this, it's not going to make sense to try and day trade this if it's just a really nice slope. A nice consistent slope to the upside. To the extent that that's the case, or to the extent you still want to work your fibs and work your reaccumulation schedules, that is fine. That's why we're here. And I did want to bring you, we could have just laid off and said, well, let's take a look at, let's take a look at how, I wanted to show you guys something cool. I'm going to show you guys something fun. I think you guys will like this here in a minute. It's not that. But let's go ahead and switch to the line chart real quickly. I try every time you guys come here, I try and teach you something, and I think you'll like what I'm about to show you in a little while. Let's take a look at let's zoom in on this price action if we can, and kind of take a look at how significant or insignificant the jump in price has been. We have jumped up from this area of about 31 cents, was kind of the max of the consolidation zone. And we have jumped up to in and around this 35 cents. So that's not too bad. That's over a 10%, 10% jump there from the key point of accumulation. Again, if we draw the Fibonacci's in here, it looks like that's probably around the, what would you guys say, the 382 or that 50% retracement? Probably so. And let's go ahead and draw a fib on there and see exactly where that is. Now I have my fibs set to the golden pocket right now. I have done a customized fib, which I can show you guys at some point. If you'd like to learn that, I can get into that. Let's go to the template that I've set up previously and do apply defaults, and there we go. Now we're looking at the ordinary fib there. We use a lot of Fibonacci's, guys. We're very into Fibonacci's. So as we look at this routine here, we did get to that kind of that first tier and then the second tier of actual investment there that we would anticipate that people started to invest there, and we know they did because there was enough support to push it higher. So we follow this traditional model in terms of the Fibonacci's and different levels of investment, kind of doubling and tripling down our money available at lower levels. That's just what we do. So that's our routine. That doesn't have to be your routine, excuse me. But as we look at the as we look at maybe a potential, additional, it's going to get interesting here because based upon this this previous price action, the fact that there wasn't a clean, I'd say a real clean breakout from here without, let's say, outside of the kind of this scoop. If we're going to look at kind of a potential almost a cup formation here. The fact that this is just such a clear formation here is really kind of begging the question as to whether or not we would reasonably anticipate a little bit higher on this. And guys, you guys are about at the height, at the maximum right now in terms of like the 36. I think that's close to the high. We can switch back to the candles and see exactly where you are at on this in terms of being maxed out or not. Yeah, you have a little bit of room towards the upside. We can zoom in on that and take a look to see where you guys are at. Charlie Abbott is in the house. Any chance of another 5 times pump from Doge this time around? We love it, huh? Very nice, Charlie Abbott. It's great to see you, brother. We got Texas in the house, I believe. Charlie's from Texas. That is some good Texas humor. We'd love to see that, Charlie. Yeah, remind us if you are from Texas. That's some good Texas humor. But hey, you know what? Honestly, Charlie, if and when we get up above the levels, I've got this orange triangle here. I can kind of go through that in a little while just to kind of go through some of the overall details that we go through. Charlie's always a great guy to have around, and he's fun. We appreciate the community very much. Had a great discussion today with one of our alpha traders, and she was overseas, and we want to say hello to Bianca. She is a beautiful, wonderful alpha trader. She's fantastic. The whole community from Red Raider, special thoughts, and hello to Red Raider. Special thoughts to Oz 007, to who do we got? AKA James Bond in the house. Also special shout out to Kenny. Okay, Kenny Crypto. That's Kenny Crypto with a K, just like the Krypto Kingdom, Crypto with a K. And who else? We got Kent. Shout out to Kent, and shout out to Chris and Al. Shout out to just everybody. We really appreciate all of you guys, the moderators in the Discord. Also, shout out to you guys. I need to make a list of all the people that we need to continually shout out to. But you guys know you guys know the Twitter by now. You know the. Let's go ahead and turn on the. If I can pull up the actual Discord link, if someone wants to throw that in there. Looks like James Bond is already on that. Perfect. I will go ahead and post that at the top of the chat so you guys can get into that as you may need. Let's see if I can post that. This is me multitasking. It's not always easy. There we go. It is pinned at the top. You guys take care of that. Good job. So I can talk through a little bit of the issues here involved in terms of what we could expect. I've brought this up and kind of zoomed out so you guys can get a little bit of a picture in terms of, what is being accomplished here. And it's got a little bit messy. Let me go ahead and Charlie, we really appreciate you shouting out like that. That's just really cool. I know you could have spent it on a beer, but you spent it on us. When I put it like that, it gets a little emotional, doesn't it? You could have spent that money on a beer, Charlie. That it does get a little emotional. I didn't mean to get serious on you. I'm sorry, but the fact that you could have that, yeah, now everyone knows that was a serious super chat. Good job. I appreciate that, brother. So anyway, we have a lot of fun here. I had drawn these out earlier on in terms of investment levels, and I had invited someone I was talking with. I said, can you come up with anything else in terms of an investment strategy that prohibits people from putting their money in at too high of a level? Because that's my real goal as I talk to you guys and as we discuss things. It's not to tell you how to invest. It's not to come up with any other kind of a strategy or a goal or anything. it's just to, like, my challenge is to everybody, how do I communicate to people? Because we have a lot of people in the community, up to like 5,000 people. When things are hot or things are not, if they're crashing or they're going through the roof, that's when people really tune in. On the daily, we have, probably around 1,000, 2,000, 3,000 people that want to stop by, do different things. And yeah, it's just a good community like that. It's kind of stable, but when things get kind of boring, we have a mainstay crew, and that's nice. We like it like that. We have a good professional group. And the question that I have is, it's a highly technical group. I'll give that to you guys. We deal with technical analysis. We deal with things like the Fibonacci's. We're very into things like investment levels. How much money should you be putting in a specific area? We don't give you financial advice. That's not the point. We even have a small little indicator here saying that we do not do that. So that's really fantastic. You guys can see that. But my challenge was to the other person today, how do we communicate to a group of people that we actually care about, that are in our community or that are joining the community or in the Doge community or anyone getting involved into the crypto space? How do we communicate with them that we don't want them necessarily to overly involve themselves at higher levels? And I had brought up the tweet, guys. This is just a brutal tweet. I guess you guys saw this from CZ. You guys saw this. Unreasonable. I can't believe that CZ, he came out with this. It's right in line with what I've been saying. This is a huge confirmation. You guys just pay attention for a minute if you can. CZ is from Binance. He's the CEO, the founder of Binance. Check out what he says. He says, checked. You wanted compensation. He's talking to someone. You wanted compensation of trading losses not related to systems issues. Multiple times, meaning you lost money, whoever he's talking to, not related to our system issues. Then he says, you are labeled as an unreasonable user. Some guy wants his money back, and CZ, the owner of the largest crypto exchange, literally is telling him, you have been labeled an unreasonable user. For future requests, you will have lower priority compared to normal users. Best regards. So someone lost their money on Binance through some kind of trading issue, but it wasn't a system failure. And so CZ is just like saying, you're an unreasonable user. Get out of here. You're going to have lower priority in the future. Like, whoa, okay. Well, we at least know where this guy stands. This is the guy that's locking up your coins and not letting you Harmony One guys and some other guys actually, retrieve your tokens, withdraw your tokens. So that guy's just telling you, oh, well, this guy's an unreasonable dude. Oh, because he lost money from something else. I see. Wasn't a system issue. So very interesting. But I want to bring that up because a lot of what I talk about, it's not that harsh. I wouldn't want to say it's that harsh, but I do get into the issue of how much should be invested at different levels. And the way I talk a lot, like on this Doge chart, how do I communicate to people in terms of what is a reasonable strategy so that we're all participating like, or as if we were, or exactly like we are, reasonable market participants. And I've brought that up multiple times. I've stated that I want us to behave, or we have to exhibit a normal kind of behavior in terms of what's expected of a market participant. And I said that before CZ wrote this about the unreasonable, you're unreasonable, you'll receive lower priority, you lost money fair and square, essentially. So that's very much kind of the mantra that's going on. And that's after I've been saying this multiple times, he comes out and says that. And so my challenge to you guys, as you're a member of this community, holder of Doge, holder of X, Y, or Z, whatever you're into. And I literally mean that, just whatever altcoin or Bitcoin that you're into, including also we've got obviously Harmony One's a big part of the community here. 20X, great story. And so from the Doge guys to everyone else, what would you do? How would you reframe this to people in terms of, for me, it's stacking money on the bottom and doing multiples of it at lower levels, so there's always insurance. That's just the way I look at it. I've adopted that kind of, and built that with some, I'd say, in and around some other major investors. I just said, the big guys in the street, they're using kind of a double down. We're ready to double down or triple down at different levels. So to me, that just guards cash at these lower levels. And I always know, no matter where I'm at in the zone, I always stack cash lower to where I can, like at a multiple, have more cash available at the lower levels. So, and I don't know if you guys have any other ideas other than that. I would love to hear them. And as you acquire and you're trying to pick up on the way up, we believe in alpha, guys. Alpha is the ability, of an individual to beat the market. Okay, the percentage by which someone can beat the market, that is called alpha. You may not see that very much, but that's the literal definition in terms of a trading context. Alpha is that percentage by which you beat the market. Okay, so that's a nice thing that we like to say, yeah, we want to find alpha. We want a strategy that's going to define alpha. We don't want to ride these roller coasters down. If we can prohibit that or we can prevent that, we don't really want to ride those roller coasters down. That's the way that we roll. That's what we do. So that is exciting. That's kind of our mentality. Is alpha. Okay, we want to achieve alpha, and we want to outperform the market. So to that to that notion, that's what we enjoy. To the notion of the strategy, that's kind of what we've all encompassed and said, yeah, we don't want to just throw and leverage everything at a potentially higher level. Okay, at a potentially higher cost. That's the worst thing when people come to me, and you guys know as well. It's like, well, yes, it's their fault. Yes, they have their own decision, but not everyone is kind of trained to even pick up on that. Not everyone understands the market dynamics. So if you're new to the market, or if you're kind of relearning these principles, just understand there's not a whole lot. As the price, ebbs and flows and goes up and down, and it achieves these peaks and these troughs. As it does this as part of the normal market activity, just understand that the dynamics involved here kind of require that you play kind of lightly at the high levels. If you ever hear or you ever see that it's up, okay, if it's ever up, typically that's kind of a nice time to think about selling. If it's ever down, that's kind of typically a nice time to at least think about buying. And we're big supporters, guys, in terms of market functions. We are bulls. We come in literally, and we charge in at different levels. That's what we do. So you talk about the bull behavior and the market behavior. What we do is we pull out a pricing target, and as this amount of money goes down, it doubles down. Say if it's 100 at the first level, 200 doubled down, it's going to triple down, then 600, then we triple down 1,800, then 5,400 or 16,200. If that's about the whole kitty that we're dealing with, I want you guys to know, if that's all the gold in the pot we got, I want you to know as it hits a certain level, bam, those bigger amounts flow in and kick up the price. And look at what it accomplished. It's reversed. It's pulled essentially what looks like a reversal of the trend after this retracement, after hitting the golden pocket, which is the 61.8 to the 65. So I've also kind of modified this out a little bit, and I will pull up and draw. Let's draw another, so we see that golden pocket. Let's go ahead and do this, and then I have modified this with, let's pull up the golden pocket so you guys can see exactly where that is. I should be able to, well, I don't know where that just went. Maybe that, there we go. Let's go ahead and pull that up and stretch this down. But after let's see here. There we go. That's good. Yeah, that's exactly the point that was hit, and we can kind of modify this a little bit more. Let's see, hold on one second. If I can get to this portion. There we go. You guys know you have settings on the inside of your, essentially on the back side of the Fibonacci's. So that, when I say the golden pocket, I've highlighted that in gold now so you can see that, or in yellow. That's just the 61.8. It has retraced from the start of the trend to the peak actions, retraced 61.8 to 65% of the price action, okay? That's real crucial in terms of it being called a golden ratio, which is kind of like a bedrock kind of cornerstone ratio figure that in and along all these price actions, it likes to hit that 61.8 to 65%, and on the aggregate or the whole pricing action will like to hit that. So that's what we look at in terms of injecting larger amounts of cash. We make sure that cash is available and not spent. Large amounts of cash aren't spent at these top levels. We'd rather, realistically, we'd rather have that be pulled out or not involved at those top levels, and then cranked in here so that at these larger movements, we're able to, and more, let's say these more predictable movements, kind of these more key movements, we're able to achieve something that is more significant with a larger amount of money. Now, whether or not that 5,400 or a larger amount of cash would ride up this entire wave, it may or it may not. It may depend upon, of course, how much is actually involved on the trade. And I always tell people to do your own calculations. That means I want to hear your strategy. We want to hear your strategy. We have a great Discord. We have a lot of professionals. If you guys knew the level of professional investors that we have in our group, you would be amazed. It's not just represented by me, I'll tell you that much. We have a lot of really professional guys who are very good at what they do, and it seems like they have just an intelligence that is really unmatched in any other kind of community that I've run across. So salute and hats off to all of you. It's a pleasure to be representing you guys and to be able to interact with you guys. So that's very, very fond of the community. And it's a pleasure. to represent you guys a little bit and to be able to communicate with you. I do just jump on streams. I do that because we need to kind of update. We had a pre-launch, and I did say we were sitting there the whole time in the morning, and I just said, this is maybe one of the problems. It was kind of a pre-launch party for Dogecoin. It was like before the launch, and I realized the longer that I do stay on in the stream, it's not going to make much sense if this is a pre-launch and it's not supposed to launch yet, right? So maybe that did occur after we got off. It did decide to go ahead and launch on up at some point thereafter. We thought that was funny though. It just wasn't going to take off while we were on in the pre-launch party. So soon thereafter, it decided to kind of start climbing up. If it wants to repeat, a lot of what we do in terms of data analytics is bringing forth and in technical analysis. So you guys know we're trying to apply the past to the current situation and trying to determine the future. And trying to determine the future, and that gives us kind of a relative certainty that we can kind of operate in. So let's take a polyline. Let's just look at if we were to go from the base to the peak, to kind of the base to the peak. Now it's going to get a little bit. We're going to need to know if we really are going to. What I would probably do is do some sort of a blended run here, because it looks like we're over on that. So what I would do is probably kind of a blended approach to this. I would want to take and look at the difference. Let's just start with this previous peak. The previous peak, this kind of the trough to the peak, was 23%. So if I'm going to extrapolate that up and bring that up just 23%, that's real easy for us to say, okay, maybe in and around, let's see, 385. I think I'd given that figure to someone else. Maybe around the 385, this sucker might be done. For a minute, that's if it doesn't want to run anymore. Greg Abbott just asked, Greg Abbott. Greg Abbott is the name of our governor in Texas. So that is, Greg Abbott is not on the post this evening. That would be interesting. Greg Abbott's not around right now, but big shout out to everybody in politics, whichever side you're on. I hope you guys are all doing well. Charlie Abbott had said something about a multiplicity effect in terms of the overall returns achieved. And yeah, Charlie, it can decide to just cruise on up. I have this figure up here at 50 cents. I have that marked out in yellow towards the top if you saw that. But as we do these analytics, we want to try and bring over, kind of carry forward what just occurred. What's kind of the tolerance here, or the threshold, and that's about like that 24 to 25 is real close. That's from the base of that trough, the initiation of the price action on up into this residual. So we're at, as you look at it, we're riding strong, really strongly right now. And to bring this up to about 24 again, just so we do this exercise, you guys see, just carrying over that information. We're looking at 38.5, 39, and around that area, and that looks just like it would be kind of the threshold that could be met. Now it could decide that it doesn't want to do that, of course, and there are different ways for us to analyze this and look at this. If you guys are looking for a kind of a reasonable, we want with some reasonable certainty, we want to know when or how this thing's going to quit so we can maximize our goal. If you guys are looking to trade, sometimes it's a precise science, sometimes it's not, guys. This wants to look like, if we just do a straight over carryover, about 38 carryover application, meaning this previous kind of trajectory, this previous wave. Okay, if we carry over the previous wave to where we're at now, just kind of an equidistant and equally sized additional step here, rung in the ladder, we are looking at in and around 38.5. So that keeps popping up, that 38.5. It would be nice to see it perform that well. Now, it decided to kick up a little bit more quickly than the previous pricing action. So we're very focused on Doge right now because of the pricing action. Those of you who are new or long time affiliates, I'll say affiliates or subscribers, you understand we stick with things that have good price action. And to the extent that this or anything else has great price action, we want to check it out. We want to trade it. That's just what we're into. We enjoy trading things with great price action. So we've enjoyed getting to know a lot of you with different communities, Harmony One, Dogecoin, etc. And yeah, we'd like to see Dogecoin become phenomenal again, because during this price action here, and that's just recently, guys, that was in and around the 15th, 16th of April. Okay, so that's something that we want to look at and say, if this can be recreated, we want to be a part of it and be on top of. And guys, I've been around Doge for a while, so but in here specifically, more recently, we want to be in and around this price action so that we can capitalize on these phenomenal gains, because it only took a couple days, for instance, to get down to the golden pocket. With other financial concerns or other coins, it takes up to a month to get it down to the golden pocket. So that's difficult, guys, when you have to wait around a month to get what can occur within a few days. That's the kind of price action we're talking about. That's what makes this something really phenomenal for us to continue to look at and to anticipate what's going to continue to occur. So, and again, here as we look at whether or not it's wise for us, and this is your decision completely, but from my standpoint, I wouldn't like to sit there with, in fact, I wasn't. You guys know we had a live stream going. We gave you the pricing target in and around this area. We clearly gave you guys that in a video, and well before time. I think about 8,000 people watched the video. Decided to make it maybe their price target too, but it was a nice level to kind of kick up. But a lot of people saw that video, and I think it was just the general buzz. It decided to pick back up very well, irrespective of why they did. But that was about a 60 to 70% return. We did capitalize out of that. And in terms of like having soft hands, guys, we just don't want to see necessarily the value of our friends' holdings go from, let's say, 41 cents down to 20 cents. We don't want to see anyone's value be cut in half. And it's difficult for us to experience watching that occur and to hear those stories. So a lot of people are trading this, and I know that for a fact. Elon's even selling, he's trading his Bitcoin. So I know a lot of you guys are trading this. There's thousands and thousands of people trading this, which is a positive thing because it gives us a different dynamic to kind of hold on to. And I think this is one of the most accurate and precise technical trading channels that are out there. We deliver pricing targets in line with Fibonacci's. We focus on the golden pocket, and we try to have a strategy for kind of lessening the likelihood that there's a large amount of cash that may be involved at a higher level. It's one of the worst things that we can deal with is someone who has a bad story about crypto because they put all their money in up top, and it's just something that you guys understand the dynamics, the market dynamics. Not everyone does, and when the rationale falls apart and we get into kind of an unreasonable actor, that's not even my words. That's who was that CZ of Binance, the lead of Binance. I just bring him up because he was really harsh when he said that. Those aren't my words. An unreasonable. What did he say? Someone had been deemed an unreasonable participant. So it's odd because he said that yesterday on his tweet or the day before, and we've been talking about just trying to create kind of reasonable conduct and reasonable market behavior. And I've meant that very as nicely as I could. But we don't want to go in and spend $100 on a loaf of bread. That's not our idea. We don't. Surely we would not want to overpay like that. And I know you guys are very sophisticated. You're not getting in at the top. It's a very financially astute kind of good. You guys are strong traders. So that's not occurring with you. You know the pricing targets that we use, and that doesn't bear repeating. It's just the fact. You guys know that. I know you guys. When I interact with you, you have a lot to say. You understand your fibs, and I haven't really understood anybody to challenge the notion of kind of a double or triple down approach, peppering in kind of up top, and always, guys, just kind of peppering in up top. That guarantees that even on like this current instance here, and I have the triangle there just to kind of represent larger amounts of cash. I was describing this with someone earlier today, and a very nice person. Okay, very good crew, good crowd. And they like the approach. I'll tell you that they like the approach. Now, within this smaller time frame, this smaller approach, if you're just getting involved into the coin, we would like to say, and I'll need to redo this, that would be the golden pocket. It did not reach the golden pocket, but as I just go in my settings, I have this predetermined. I'll just click over and say apply my defaults, and bam, we got that done. So as we look at the Fibonacci in here, we're able to say that in line with that, we've already achieved on and through this 50% level within this smaller portion. So we've already been able to engage once, twice, and really kind of 3 times into this. Right when it breaches into the green, immediately we're involved for, say, the example is $100. The next level, bam, is $200, okay? The next level would be kind of triple that. We're going to start tripling down to $600. Now, that may just be an example to let people know we're trying to create a rationale of having heavier amounts of cash at the lower levels, because it doesn't make sense all the time to go ahead and get more involved at the top levels. You still want to experience this upside, but you can't determine 100% if it's going to go down or going to go up. We had some phenomenal movement in some of the other major coins today, and it's kind of brought the market in a certain direction. And I will say that Dogecoin is strong enough, guys, it's strong enough at some point. I don't even know that it needs the kind of the quote unquote leadership from some of these bigger coins. Realistically, looking at the situation, I don't know that that's a reasonable thing to kind of expect at this point, because it seems like Doge is paving its own road. Today it surpassed the market cap. Dogecoin surpassed the market cap of Cardano. You guys understand that? That's a big move. As we look at this, just real quickly, and you guys, if you like this chart or not, just recognize this is big news, guys. Dogecoin surpassed the market cap of Cardano. It went to 44 billion over Cardano's 43 billion. So the next one is to jump over Tether, okay, and that's about 6 billion away. Then we'd have to add, on up to close to 30 billion to get on up over XRP. It would be nice to see it. What if we get in the top 5, guys? That'd be phenomenal to see Dogecoin get in the top 5. Guys, we're number 6. That's pretty phenomenal. We're seeing some great use cases, etc. So in line with that, some of you may be phenomenal holders. Some of you are happy to do that. Some of us just have to trade. I have to say, some of us are we're compelled to trade. We're compelled the same way that we don't want to sit there. And I guess the problem is that we run into. I don't, for instance, want to watch necessarily myself or anyone else the value of their holdings go down by 50% and then not be available for this lower golden pocket, because this is where all the gains are made. This is kind of that key area. In addition to the original run-up, of course, this is where things become phenomenally exciting. That was such a great time. We had a good week then, huh? That was a good time. Weekend, I think, a really good time. We enjoyed that quite a bit. We were streaming during this. Given the pricing targets for this, they got picked up. Pricing target here got picked up for a move. Pricing target here again got picked up for a great move. So yeah, we've had a good time with this, and it's been a lot of fun for us. And I know a lot of you have had a lot of fun as well. So that's exactly what we kind of want. In terms of these smaller steps are a little bit more complicated, I'll tell you, to kind of run and gun and day trade. Still, it's great practice. I'll say that if you guys are into practicing on this, because you're clearing 5 and 10%, and depending upon which amount you have that you decided to double, triple down, if you may have it segmented. You may say at this level, whatever this level is on this on your Fibonacci is drawn out. You may even change the numbers on the Fibonacci. You may say, I've got 80% of my cash tucked down at the lower levels. That's just it. And I don't get involved above 15%. I'll put, or let's say 80%, 15%, then I go 5. That's just it. That's what I do. That's fine. That's a different approach. I like to see how that works out. You have 80% in the lower level, then you have 15%, then you have 5%. That's cool. Maybe it's easier to calculate. And then you're not involved at all at these upper levels. That's cool. Are you going to miss anything like this after you've gotten out and you've achieved a profit? Maybe you're dealing with heavier amounts of money or a larger component of your cash. I'd like to know, are you comfortable with just missing out on this altogether? Is it kind of too messy for you? How is it working out in these top levels? Because I'd like to engage immediately when we get into this. And once we hit this retracement, it's kind of obvious we're going to be in a retracement, bam. And around this level, it's like, okay, I'm going to go ahead and draw those out. I'm probably already putting in, per the strategy, go ahead and put in my orders on this. And the orders are literally already going to hit here. They're already going to hit here. They're already going to hit, double down here. Let's say if this is 1x, essentially that's 2x. Essentially this is going to triple down. That's going to be 6x. So it's going to be 100, 200, 600. Why is that interesting? Because immediately that's picked up, and then you get into your day trades. You're day trading on your specific fib levels. This is not uncommon at all. Once those orders go in, you put your orders in, and then bam, you're up. Then you get to literally almost play this again. All right, you're playing this again if you want to do, talk about day trading. This is some heavy activity, great pricing action. Incredible practice, just incredible practice at working your day trades. If people are working with 10 or 20 grand now, you always want to have larger amounts of cash underneath. And on top of that, if this level were to fall through for any reason, you would want to have, and guys, this may be compromised, whatever we're talking about, that 100, 300, etc., that would be within the paradigm of this. We would want to recalculate just within this kind of larger 100 kind of figure. So we've done the math. There's a great video that we put together, and I think you guys can watch that. This how to buy into crypto without overpaying. how to buy into crypto without overpaying, guys. We go through all of the specifics in depth. The mathematics there are good enough. You guys won't have to do them. After you watch that, you're like, all right, we're gonna do our own example, our own calculations, but I give you guys everything you need. And it includes this, well, the difference between the input here of the 100, the 200, and the 600 here versus exactly what's input within these specific levels. Guys, we go through all that in the other video as an example, guys, just as an example. And again, you formulate your own strategy. We'd love to know what your strategy is, and that's just that's an example. But we'd like to, again, you just saw how the day trading effect would happen there. We have alpha traders. That's what we focus on. We're developing alpha traders, and it's session work. We're covering some great books. You guys, if you don't have this book, I'm going to show it to you, The Technical Analysis of Financial Markets. This guy is a stud, John J. Murphy. This book is extraordinary, guys. Technical Analysis of the Financial Markets. I highly, highly, highly recommend this book. I could not more highly recommend this book. It's from the New York Institute of Finance. Guys, you will get into every different kind of pattern here. Some of it's about stock markets, but guys, you'll get into some really nice, basic channel work. All the things that you're trying to find on the internet, the trend lines, the resistance, supports, all the basic fundamentals, guys, it's in this book. Now, the book is about 500 pages, but I'll tell you, it has everything, guys. It has everything in terms of technical analysis that you might want to look at. So check that out. If you do have time, check out the technical analysis of the financial markets. I don't plug much on this show at all, but I do want you guys to be able to see that and to know that there is a resource for you to be able to understand technical analysis. It kind of reframes the way you're able to have discussions and engage in some different thoughts, some different approaches and strategies to your trading. So that's kind of ultimately it's one of the goals, that we can build a better community amongst ourselves and be a better participant ourselves. So go look at that book if you'd like to. If not, pay attention to the channel. We'll try and do a good job of representing what that book is all about. Let's look at this current situation that we're in, and let's ask, are we starting to go into a retracement? Is that what's starting to go on here? As you guys gauge kind of where you're at with Dogecoin, is this what we're going to look at as a retracement? Let's pull this over. You just kind of saw with an example there. You just saw exactly what your exposure could have been based upon a hypothetical scenario. Let's just say a hypothetical scenario. It seems like we have a little bit more room to go. It may be, I'm just going to say, by the feel of it right now. We did have this kind of hook in here. You guys will see this, and this is going to be an interesting question right here, because we had a hook right in here. As we're looking into the details, guys, we get very detailed on this channel. You guys know that, but I like to be precise. We have this hook right here, okay? So I want to bring this kind of hook action. You see that? You see the kind of the dog leg or the hook kind of midway. I like to look at things as if they're programmed. I like to look at things as if it's just a regular kind of a programmed, potentially a programmed trade that we're looking at, and something which could repeat on kind of a technical level. When we say technical analysis, like a technological level, maybe there's actual programmed buying going on. To the extent there is, we would want to be very sure about the possibility that, small, what looks like maybe kind of a glitch, okay, here, or a small, let's say a small characteristic is probably a better way to say it. A small characteristic in a pricing action could definitely be repeated. Now, as we lay that over, you guys will see this is very nice, okay? As we lay that over, take a look at this real quickly, guys. Look at this layover from here, exactly, guys, exactly on, and I'll pull this over to the left, but you'll see that. Just look how precise this is. Do you see that? I'll pull this up so that you can see that specific line there. Okay, you see this this leg right here, this dog leg here. Yeah. Okay, so as we insert this here, I want you to see that it fits just perfectly. You guys got that, right? So let me put these lines back. And as we pull this up into the other zone, we're wondering, is this the retracement or is this the dog leg? Well, if we look at kind of this area in here, it very easily could be a dog leg, right? It very easily could be that same dog leg. It's definitely challenging to not see that as kind of a repeat pattern if you look between the two. So, to call that perfectly, would you want to scale out at this point if you are trading it? this is kind of where I just get, a little bit, I let people definitely do their own, kind of their own analysis. And I would, particularly what I would do personally, what I would look at is my overall gain. Okay, that's how I measure things when I put in orders. I look at my overall gain from my entry spot to the max price. It's not necessarily, it's essentially the threshold I want to achieve based upon kind of the market conditions. So I would look at from this point in and around whenever we were able to achieve this, let's just bring this over a little bit, from kind of the low point here or the low point here, I'd want to know from there exactly, and I'd measure out, that's about 20%. 20% for me is probably pretty good. I'll just tell you that. That's okay on while we were building these steps. It's not bad. Abbott in the group, Charlie made a kind of a notion, are we going to hit another 5x pump? I don't know. This one was 25. It's still, maybe likely you'd hit 25, but that was a nice, perfect line, a nice, breach straight up to the upside outside of this kind of channel, this consolidation which had occurred. And it was just kind of a little bit more, I don't know, it was a little bit cleaner. Right now, it's gotten a little bumpy earlier on here, guys. That's one thing. It kind of got bumpy. It kind of looked like maybe it wasn't going to really set any kind of a new interim high, and then it did. And we were just looking at it like, what are you trying to tell us that you're going to do or not going to do? We were patient, but at the end of the day, it was one of those situations. It just got a little messy in here. It's not real clean price action, okay? That's not super clean price action right there. So as we look at that, it's kind of like this dog leg would be nice. I'd like to see that play out, and all you have to do is wait and see if that plays out. If you're holding, that's fantastic. If you guys make that gut determination, I'm not going to give you the advice to sell it or not, or to hold it or not. I'm going to tell you what goes into my own calculations in terms of how my trades are comprised. And typically, it's this lower level with the additional amounts of cash and the heavier positions on the retracement that I'm willing to bring up and say, yeah, probably 20% is just A-okay with me. That's another 20% in the kitty. If we look at this now on the candles throughout the day, you're looking at the 25% was met. So that's a good threshold. Like a 20%, that's fine. If you look at like what would 20% do to your holdings, right? Let's do the power. What is that rule of 72, right? If you do 1 times, let's do 1.2, okay, times 1.2, that's 20% on 20%, that's 44% times 1.2. If we do it 3 times, we're at 72%. So 4 times, making 20% 4 times. Guys, if you're able to make 20% 4 times, that's double your money. Okay, so you may not do it here. Charlie's saying, Charlie Abbott here, he's asked a question. He says, are we going to be able to do a 5X? Well, you can get it 20% at a time. So that's nice to know that you can do that. You guys, that rule of 72 just requires that you take your percentage, divide it into 72. Normally, that'll give you about the number of intervals you'll need. It's called the rule of 72. With something like 20%, etc., it can change a little bit, and there's some limitations to that rule. So be careful if you use that rule. It's a very popular rule, but do be careful. So I'm not sure that this exact dog leg will prevail. It could still, and I'm not going to call it necessarily. I mean, at this point, Elon could tweet within the next 20 minutes and just decide to do whatever he chooses to do. He has done that recently. It seemed like right after we got off the air, wondering about if it was going to happen within the next 5 minutes, he decided to do something great for people who held out on this. What was this? Was it on this here? Where was this? Yeah, it was. Was it there? I want to say it was there. Yeah. Elon decided to what was that, guys? Why did he do that? Like right when we got off of the feed, it seems like he just went kind of ballistic and decided that he was going to make sure that this thing broke out the way it needed to break out. So that was exciting. We appreciated that. After the fact, we're like, well, way to go, Elon. So that broke up fantastically well, and I think he was the Doge father. So we love that. We normally like a management team. We love the fact that Elon's so involved. We really believe in his business abilities. I know all of you guys do. It's just nice to be a part of a coin that's doing well. It's receiving adoption. And honestly, guys, I've talked to people that you would have no clue would be interested in hearing about this. And they'll start off, you have to tell me, was this started as a joke? I need to know that. It's like, you need to know that, huh? Well, I think so. It's kind of started off like a joke in terms of, well, we'll buy some of this. We'll tip such and such online. It's no big deal. It's online money, kind of no big deal like that. And you explain that, oh, it was just kind of online money. Oh, well, certainly that's changed, hasn't it? Yeah, yes, it has changed. It's not just online money anymore. Everything's digital, because a lot of them now have online money and online accounts through like Zelle or through Cash Pay or however else they're facilitating their payments. So the notion that things are coming around in terms of kind of digital finance is kind of very important, and it's very much on the radar. A lot of people are paying attention to it. So I wanted to let you guys know that it's kind of, it's gaining a lot of popularity, so that is good. Doge is kind of leading the scoreboard now. It's kind of up about 5%. Looks like Atari's up 12. I don't talk about too many of these other ones. It's the only one in the mix right now that's doing about as well. It's just Doge and Doge, 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 and Doge. So that's nice. It looks like it needs to be an outlier. What I'll tell you is Doge has a habit over the last several weeks of showing up on the radar all green in the instance of about up, what is it, up 30%. You guys remember those days? It'll be up 30%, up 40% some days, and everything else is just in the misery, in the red. So with the big coins kind of recovering these days and heading back to higher highs, I would say potentially to higher highs. That's what we're looking at. Yeah, it's looking okay for Dogecoin, having surpassed today, having surpassed Cardano, being above Polkadot, having surpassed Cardano. It's really phenomenal, guys. It's above Uniswap, it's above Bitcoin Cash, above Litecoin, above Chainlink, above USD Coin, above VeChain. I mean, guys, it's above Theta, it's above Stellar. So yeah, it's right up in there. It's about to want to break into the Tether. Let's say past Tether into the top 5, and thereafter it could become, if it becomes competition with XRP. I know XRP has hopped up in there recently, and we brought you XRP, when was that? In around 80 cents. I think it's doubled at least since then. So that's nice that you guys got in on that, who were paying attention to the channel and subscribing and turning on notifications. That's the kind of information we do bring you. In addition to potential, breakout patterns, etc., and of course pricing targets and accumulation strategies so that you can mitigate your risk and increase your gains. We want to maximize your profits while doing what? We want to maximize your profits while minimizing your risk. That's the key there. Let's maximize those profits while we minimize your risk, and we can do that through proper exits, etc., and essentially getting to the point where we have some sort of a reaccumulation strategy. So the greedy hands sometimes they say what do you have, golden pockets, diamond hands, and in terms of just the greed factor, I think it'll just get to you instead of making a colloquial or anything like that. I just say that the greed can get to you. I think you guys all know that. So as you look at this again, guys, if you're looking at right now from the point at which you got in at the heavier amount of cash from this area in here, that was about, I think that was the 50% retracement that we looked at that earlier. And by that I just mean that this was based upon these retracements here. The Fibonacci retracements, that's how I like to schedule up a strategy of inclusion. So that's 100, 200, and 600. It may be different for you guys, but it's an amount of cash after you're out of the red zone. And do realize, guys, when you look at a Fibonacci sequence, let's pull this up over. The one in the background here is a Fibonacci. Let's move the triangle over a little bit. That was to represent kind of an investment model in and around this or another area, just kind of the whole idea that heavier money should be involved. Seriously, guys, it should be involved in terms of economics or market demand theory at lower levels. More money at lower levels, because the higher price it is, it's just you're not going to have the demand. It's just too expensive. If something's extremely expensive, that's just economic theory, that's business sense. So as it becomes more reasonable in price, as things become more reasonable in price, you have more money available. So that's just all that triangle was intended to kind of demonstrate. Let's look at let's bring up a Fibonacci just kind of out of nowhere, just kind of to discuss this for a second, okay? The top zone is a red zone. Now, we know typically in a market, guys, red means there's not going to be any money, right? Red means, well, that's a bad day. It means you're out of the money, right? I'm not sure. Is that coincidence? This is built into the program. That's the default. In and around this top level, it's red. When you draw it, it's red, guys. Then you start to get into the green, a little bit of this green, right? And it's not real green, right? Then the next level is really green. It's kind of a vibrant green. That's kind of like what we would say, okay, cool, that's a real green, right? So it goes from red, which typically means no money. You're not going to make money, you're out of the money, right? We always talk about don't buy high. So it's a nice coincidence that we can draw a box up that kind of goes in line with, the market theory here, which is just, we can't buy anything at that level. It's just too expensive. Once you get into the green, okay, that makes sense a little bit. Start peppering in some potentially some investments, at least on the whole of a market theory that would make sense. Okay, just a normal, ordinary participant in the market would say, yeah, it's getting kind of reasonable. It's not so expensive. There's some leeway here on the demand curve. We're going to act rationally. Then as it gets more expensive, yes, there's going to be even more. Or as it goes down in price, there's going to be even more. There's going to be even more demand. So as it goes down, that's why we double and triple down. We start to just triple down into this, and then we get into kind of the gray area. I even like that because it's kind of in the gray area, because are you really going to invest all that much more in the gray area? Because is it going to fall through? Is it going to go down to the next level? And we always have backup cash. I always have backup cash, guys, in terms of the ability to participate at lower levels. So that's just kind of the insurance factor. So all these computations need to be brought up, but I wanted to bring up the color coding here because I don't think it's by chance. It's just, if it is by chance, it's perfect that we can look at that and we can understand kind of a real, it's just made to suit. I don't think we could make this program and make it any more, any more just agreeable for us to kind of understand what's going on. Yeah, this once you reach kind of this retracement, the peak here, the interim peak, yes, we are not going to invest in this red area. Red is kind of like bad. Red is losing money. These instruments over here, these concerns, the coins they're losing money. They're in the red. Even when the price of Dogecoin on the bottom, when it flashes, okay, you'll see it when it goes down, it goes red. When it goes up, it goes green. Do you see that? It goes down, it goes red. If it goes up, it goes, come on, go up, come on, green. You see that? So that's the notion of, and that is live pricing. You guys know that. So it's not just it's not a ticker or a clicker. That's the live price action you guys are able to see. So that's the notion of in the red. In the red we don't necessarily want to invest. Okay, that's just, it's too expensive. Even on the micro, can I say even on the micro? I guess I'm trying to just get this across in some kind of nice way without telling people anything, but. You have to understand it's market theory. So I think you guys understand the whole notion of not buying high. That's just me. I'm not buying high, and I don't want to talk to anyone who bought high. If you guys bought in high, I feel bad, and I don't want people to do that. I feel like we can have an impact on the community, and I know you guys can. You're a smart group. So let's color in these fibs a little bit. If you guys want to do that, let's go back to settings and let's dress these fibs back up a little bit. This kind of matches into the Binance fibs. I was having a discussion with someone who's on Binance today, and there we go. There's some fibs for us to look at that are just slightly colored in. We can go ahead and stick with those for a minute. There we go. Kind of back to normal, a little bit of the normal framework that we can look at. But yeah, guys, the same applies to me. The way I'm doing things, period, always is in this green zone. It becomes a little reasonable at the very top. Nah, that's in the red zone. That's not going to work. It's too expensive. As soon as you get into here, yeah, I'll start. As soon as you breach into that, I'll start to want to play a little bit, just peppering in. This is what I say, guys, just peppering in a little bit in and around these areas. If it's 100. I just bring up the idea of 100, guys. If it's $100, for some people it may be that the representative model is maybe it's 1,000. Maybe this is 2,000. Maybe out of $1 million, maybe on top you have 10,000, right? It's just a very small percentage, and we went over all that, guys, in a very detailed video, and I want to just point that out because if you watch that video, you'll understand kind of a concept, you'll understand a strategy in terms of how to buy into crypto without overpaying. Guys, this is not a shill for a video. I honestly believe this is a good thing for you guys to look at and at least present me your own ideas, because you're smart enough to come up with your own ideas. I'd like to hear what those ideas were and whether or not you believe that I've received some very positive feedback from all our pricing targets have been very accurate, and that's along the retracement lines, just because we're able to use the program. And that's not to say that lightly, because it's not always easy to use this program. TradingView, this is the Premium Pro Edition, etc. If you guys don't have that, you're welcome just to watch the channel. We're happy to bring you the Premium Pro Edition, and we're glad that they allow us to share that online. You got to think about that. That's nice that they're willing to let us use that online. It's very nice. So you guys can partake here. We go over some other coins from time to time. Doge right now, let's just kind of check back in, is at 6%, about 6%, almost 8%. It is a little bit off on the Tether versus the USD, and that's just the case. You guys want to know the difference, etc. Tether is tied to the USD. That's the coin instrument, so I kind of prefer Tether. But normally I'll do different drawings or different, essentially what I will draw, and technically on one may not be on the other, and vice versa, just to kind of give myself two different options to look at, kind of two different hypothetical scenarios. So as we look at that, we are still, I'm going to say we're kind of, actually, let's go ahead and are we going to call this, are we going to call this being, is this an official pivot here, right? That's what we want to know. Is this line in here in and around the time when, and let's make sure we are on the right time frame. Always with your, as you guys are drawing your Fibonacci's, always make sure that your time frame is appropriate. Okay, it can really change things up when you guys change your time frame. You say, well, how do you know which time frame you're supposed to be in? Typically, if the price action is within like a period of a month, I'm going to be on probably, at the max of 1 hour, probably like a 4 hour, okay? Maybe a 4 hour over the period of time of a month. If something's within the period of a week and all this stuff is going on within a week, I'll be potentially on, let's say, a week, probably 30 minute, I'd say 30 minute and around there, depending upon what I'm looking at. Now this has been, how many days has this occurred in? And we're just looking at this most recent time frame. We've been zoomed in on that. So as I look at, like, this is 16 days. 16 days is borderline. I want to get back into the hour, right? I want to kind of float back into the hour at 16 days. I normally don't play with the 2 hour, okay? So probably the 1 hour, the 4 hour, as we get in towards a month, probably 4 hour, okay? As we get, or maybe in between the 1 hour and the 4 hour. I just do that because I like there to be some proportionality between the scale I'm looking at and the time frame within which the pricing action occurs. Okay, so a lot of people will ask me, how do you choose your time frame? How do you do that? Well, it's kind of a feeling you get, and it's kind of just it's the proportionality that you're looking for in terms of being able to kind of represent all of the price action in a comprehensible way, given kind of the duration that we're looking at, and that becomes kind of intuitive after time. Just give yourself a little bit of time with it. Typically here, you want to adjust this on the bottom to represent, if you need to see the last year of information, if that's pertinent, go to the 1 year. If all the actions occurred in the last 3 months, just look at the last 3 months, that 3M. If it's all within the last 2 weeks, well, just do the 1 month, and you'll be able to kind of adjust your pricing kind of scale upwards and downwards, kind of the severity of it. There on the right, or the kind of the frequency of it, you'll be able to adjust that on the right. And scale, I think, is the word I'm looking for. You'll adjust the scale on the right. So as we look at that, we will just notice that we are definitely broken out of this previous kind of zone here. But again, it was messy. And it was just messy in a different way, because we were expecting when it decided to take off. And let's look at the candles, because the candles will always show you. I deal with the line charts all the time, but then I go to the candles to kind of show myself a different picture in terms of what are the overall highs. What is the overall price action? That's not always represented on the actual candles. See, now it looks like we are achieving, I'd say, even a little bit more, maybe not that much more, a little bit more than we did in this little dog leg, okay? So, yeah, I think that 25% call was maybe a decent call in terms of kind of measuring out of this, and it could turn around at any point in time, guys. I like the idea of peppering in. I'm just saying that, or maintaining. Some people have a nice solid position and it's just not going anywhere, and they decide to trade on the residual. But these business are these business decisions. I almost said these business decisions. I don't know about that. If these are business decisions, the trading decisions are very personal. Okay, and they practically are business decisions. You guys are working. You're trading as if they are. This is your business. A lot of you are very serious about this, and I know that, and we value your time very much. We appreciate you very much being a part of this community, and yeah, we value our role here very, very greatly, and we know that you guys have time to spend anywhere you choose to spend time, and we just appreciate that you guys will spend the time with us, and we value that very much. So that's a sincere thank you to all of you. I know you could be spending time doing anything on any channel right now that you choose to be here, so thank you for that. That means a lot. So when we look at that again, the accumulation First of all, like let's say a successful exit, right? If the tolerance is, and these are kind of pre-calculated to the best degree possible, okay? Pre-calculated within, like, what's your tolerance? You know, if your tolerance is literally 25%, that's not bad, guys. 25% on a trade, that's really nice, okay? If your tolerance is 20%, that's not bad either, okay? Depending upon the frequency within which you're able to achieve something. And I don't draw this up too much. I've been drawing it a little bit, you know, from time to time, but I'll just bring up like a sine curve, right? And let's go, where did this sine go? The sine curve, there we go. Now a sine curve, just so you know, depending upon the frequency of something, okay, we talk about a measured move, so you guys understand the vocabulary. A measured move within a channel, okay, or a measured move may be within a consolidated pattern and the next step up, okay, so this is a measured move, okay. It's represented typically by kind of channel work or an opportunity to buy and sell. Every time it's low, you want to buy. When it's high, you want to sell. So when it's low, you want to buy. When it's high, you want to sell. When it's low, you want to buy. When it's high, you want to sell. So that's typically, and things can turn around at any point in time. I'm going to say it's still developing up there. But if your threshold is 20%, you know, your threshold is going to depend probably what you decide to trade upon. And if you decide to start to trade upon something that looks like this, way out there, you know, this is very zoomed in for, I'll say this is very zoomed in for the price action on Doge. The price action has been great. But as you start to imagine something really stretched out like this, and you're only getting price action every like 3 or 4 weeks, right? Imagine you're only getting like 3 or 4 weeks an opportunity to make like 15%. Yeah, that's really boring, you know. Sometimes that's really boring. Maybe not if you're playing with larger amounts of cash, but people like in crypto, you guys enjoy this notion and kind of the speed, I'll say the pace of things. That's what is part of the crypto ideas, that you guys are able to kind of gunslinging. I mean, it's kind of the Wild West here, guys. It's a lot of fun. There's a lot of different price action, a lot of surprises, and there's typically opportunities to make money around, what is this, every 3 or 4 days? I mean, how long was this in this channel? For 5 days, let's say 5 days. How long has this been in this channel? So about 3 days. So yeah, 3 days, about average of 4 days here recently. So it took about 2 days for it to get down to the golden pocket. That is gorgeous, guys. That's great price action. So there's no complaints here at all in terms of this taking too long, or, well, we need 20%, or no, I need 50% today. I gauge that. I bring that up because as you're looking at the duration or the frequency, the period of time it takes in between your trades, you can kind of become a little bit more reasonable, right? You can kind of say, well, if I'm going to be able to make 20% every 4 or 5 days, if I can do that 4 times, I want to double my money, right? You can definitely say that. Do the math. Add 20% to, say, 100, then 20% to that, 20% to that, 20% to that, you're over 200. Okay, you just break over 200. So if that's your goal, you know, is to do that, and I'll tell you this, it probably, if you're going to do that, you can't leverage in all of your cash and have that equation. You couldn't do that on a math problem and have your equation prove to be perfectly sound, okay, because it's going to break down as there's any variation in the price. If it does retrace, we want to be there like we were here at the golden pocket with the funds that that were accomplished in and around this trade, the exit of this trade. Well, how did you know to get out there? Well, we got out there live. We were on stream. That's it. Coach blew the whistle. That's what we said. So that was it out there. Again, we could have held and watched the value of the account go down 50% for everybody and our friends and our community, but I didn't know that was the threshold had been reached. So I didn't see that would be a reasonable market participation. I just didn't see that. And it's never financial advice. It's just kind of like, well, if you've reached the threshold, and we computed that, if you've reached that threshold and you can carry over or extrapolate or extract this information, essentially kind of the threshold aim of the next that next gain event, and that next price action to the upside, then, you know, if you can calculate that, then why would you expect to push that on up to the, you know, the next unreasonable level? We've just seen a big amount of lack of tolerance. I'm going to say a lack of tolerance from this guy, the Binance. I don't want to harp on him, but he was very mean to people. He was talking about someone had lost money and whatever he decided to say. You guys, if you'd follow us on Twitter, we would definitely appreciate that. Let me go ahead and bring up The Kingdom. You guys may all be followers, that's fine. But type in The Kingdom, and we'll plug you into, you know, kind of live chats and some different things. You'll go down there and scroll down and click on The Kingdom, okay? When you click on The Kingdom, that'll bring us to Krypto Kingdom. Crypto is with a K. Okay, so crypto with a K. Click on follow, turn on alerts. We send out great technical analysis. We called, for instance, the BTC inverse head and shoulders. I think we were one of the first ones to call it before it actually occurred. So we give you, some great stuff like that. It's just a good group, guys. We have a very phenomenal group, so we're happy to be kind of at the helm of that group for you, and we're looking towards progress, a lot of progress as things go forth. I think the Discord link's in the top of the chat. You guys can look at that. And what else do we have here? Let me just take a peek. If you guys would also drop in the into the chat, let us know where, just let us know where you are from. If you guys would drop the country of your origin and let us know where you're from, that would be fantastic, so everyone can take a look at where everyone else is from around the world. That would be great. That would be really great. We would appreciate that. And so we deal with periodic period intervals, or the timing here. The period interval or the timing was cut short or abrogated here, which is nice. That shows some additional bullish, I'd say, trend is in the works with Dogecoin. I would expect that to mean that we've probably broken, to answer that question that I didn't fully answer last time, that I had brought up. I do want to bring up whether or not this is a pivot. I think it establishes itself as a pivot officially, and I think we're entering into a different kind of a trajectory, particularly given the fact that this period has been cut short, and we do have some timing intervals that are placed here. There is an argument, I suppose, there would be an argument that it hasn't been cut short due to this previous drop here, and that we could go from a low, and this is what we would essentially be doing, is going from a low to almost a low to about a high. So we would be playing on the pivots here. I'd say the kind of interim pivots. Whether or not we want to define this as kind of a major trend changing pivot, I think we could do that, and I would say I'd be about ready to go ahead and sign off on that and say I agree with that, as long as we don't experience any real rapid decline in the price here. If we get any kind of a fall off like this, and that would probably happen on the broader market, the broader crypto market, any kind of rapid decline in and around this area, I would anticipate that would just be a bit much to say yes, this is the kind of a pivot or a change in the nature of the trend, okay? And the trend technically had become very temporarily bearish during but it always does, guys, during the retracement. And it's only bearish to the extent that you expect it to go down to contact your lower levels of retracement. Investment opportunities, it has to go down there to give you an opportunity to invest. I know you guys know that, so you're a sophisticated crowd. So I know some of you guys in here are very good traders. So I appreciate you guys being here. Thank you very much for being here, and we try and do the best we can, bring you the best content that we can. So after this golden pocket, we've gone up. I do like those. I don't mind the application. I don't think you guys either mind that either. You see the application of these Fibonacci timing intervals, and we've done this before on some different matters, but you start to see how they do fit in. We didn't come up with that earlier on today, so I will bring that up in the context of, it kind of looks like we're right on that with the low to the kind of just almost on that to now we're at another kind of pivot. So that would also be another indication to me. I would say that what we're reaching right now is really close to being another pivot, and that's some complicated stuff, guys. But in terms of this is the low, we have another low, we have another real close to being another low, potentially the high, okay? And it's real close, guys. That's real close, and to be that close, I would want to really take a step back and say, well, I know that we have looked at a lot of these, multi-time sequences in terms that are drawn out, the Fibonacci's, in terms of the blue lines, those represent the timing sequences, guys, you know that. So I would want to say, it would make sense that given the fact that this is in a low, right? And let's make sure we've drawn it just about perfectly as well that we can. And it does, we can, I guess we can bring this in if we wanted to, but really it's going to be on that level right there. So it's on that major thrust downward there, that primary, the lowest candle. So that's right. This is very, very close. This is very close. Now, again, it could shoot up just like this occurred a little bit early, and then it kind of shot down, just a little bit of a kind of a differential between the price action and the actual Fibonacci line. These aren't always perfectly on as you look at kind of the cycles and how things perform. And as we look at this here, that means that this could continue to go up and in past this point. But given the perfect points of the previous pivots, that is what I would expect is a pivot, a near pivot. You know, we're at the point of a near pivot, irrespective of something that we would look at the RSI. Could it continue to outperform? It certainly could. What is your threshold? If you guys are involved more heavily or lightly, that may depend upon whether or not you want to make a 20%, a 30%, or whether or not you're just going to hold it and just continue to do kind of a good job. Let's see Adam Beach. I appreciate that. Big shout out to Adam Beach. Nice to have you here, brother. What do you see the recent high of 37.5 cents breaking down to before the next spike? Well, that's a great question. That's a real great question. That is a perfect lead-in, Adam. You are right on the ball. Adam just asked the correct question, guys. Adam asked the correct question. Big shout out to Adam, because that's the correct question. And you guys will see that AD, that's just the start on that you guys saw that sign. We were working on, I promise you guys we'll slick some things out on the channel. We need to get a different rig. You guys maybe help me out with what kind of computer rig I need to get. I'm not real big into like neon computers and gaming and all this different stuff. I guess I'll get something nice with a graphics processor and all that stuff. I'm real lightweight. I have like a nice, intelligent, slim and trim machine, different things, and I'm just kind of into that. But let's get into Adam's question. As we do that. And Adam, I appreciate the support. Let's look at it just means a lot. It's a form of validation. Appreciate that. So let's look at the retracement. What he's getting into is what is essentially, what do you see the recent high of 37.5 cents breaking down to before the next spike? So what he's getting into, and Adam, I'm glad you asked this, because this is what we deal with. What I want to do, I want to remind everybody the overall, let's zoom out first of all. The overall, as we look at this, the overall, what do we call this? The Fibonacci's, right? The overall Fibonacci, okay, has given us, and let's go ahead and take the RSI off for a minute, if you guys don't mind. I'm going to just eliminate that for a moment. It is high on the RSI. I think it's in and around over 70 on the 30-minute time frame. So as we look at this, let's pull these lines over too. These are our Fibonacci timing lines. Okay, we see the Fibonacci retracements, and again, guys, all that is a way to discuss between the initiation of the trend, and the high. Okay, it's just exactly the extent to which we're going to retrace along at different levels. Okay, so the retracement upon different levels is also going to occur in and around. And I'm going to switch to the line chart. Okay, the line chart is going to let us know exactly what these levels of retracement are. Okay, these levels of retracement are literally going to kind of define what the question that Adam just asked. Essentially, what these essentially it's gonna make it to where, Adam, I'm not sure that it really matters as long as you're able to accumulate. Okay, if you're willing to accumulate, I bring up this red zone. Okay, because that's kind of important. In terms of it now entering into this zone where things are very high. Okay, just overall we're getting back into that kind of upper tier of the overall aggregate that we just looked at on the overall price schedule. Now we're going to apply it though to the individual. We're going to pull this triangle was just here, guys, to remind us more cash on the downside. That's all that was representative of that. Next time maybe we need to filter the actual figures in there so you can understand the dynamics of what we were trying to represent. It was just a different discussion, so that's okay. Let's look at what we do is we draw. I would draw from the base here, and it's not a real clean fib either, guys. It could easily go here. I might call this one here. I probably would, just because it looks like on the 30-minute, I might go to the hour, believe it or not, just to kind of see what that price action wanted to look like. Now on the hour, it looks like it's kind of repeating as well, but do you guys see the difference between the 30-minute and the hour? Okay, on the 30-minute, we don't have, and this is important as you guys choose what you're looking at. On the 30-minute, it looks like we have kind of what appears to be kind of a consolidated triangle, which would be very in line with the previous triangulation at the foregoing level. We saw that occur more or less in and around this previous price action, in between, which served as a reversal in and around the golden pocket area. You guys will recall that. We drew that and we got that out to some individuals. But yeah, this looked like clearly some sort of a triangulation that was kind of stutter-stepped, a little bit of a fake out, but ultimately it went, I think, in the right direction. It was at the golden pocket, so I would have anticipated that would have occurred. So as we look at, kind of a triangulated sequence here, real choppy and real, unfun to look at, guys. I think we had actually drawn it through kind of these top levels just to give it a little bit more of a little bit more of, and we didn't know how far out it would go. It broke up about at that point, but at this point it was all the way out through here. It was all the way out essentially through here. So we didn't know exactly where it was going to go. It stutter-stepped and faked out there. But as we zoom out on this, the triangle, that triangulation doesn't look so crazy given the magnitude of the peak that it did descend from. So it wasn't all that unreasonable to think that triangulation could occur and could develop after this degree of a drop, a 50% drop within a 2-day time period, guys. That was 2 days and a 50% retracement of the overall, essentially the value of the increase from the base to the increase, or the top of the price action. So that's a decent price, kind of a price construct, and a decent kind of what could be, it turned into a non-continuation pattern. I'll say that it did serve as a pivot. So, and then we had another one here. I'm bringing this up right now because the point here is essentially, where are we going to draw the Fibonacci's on this level? Okay, do we include this? Do we not? Sometimes it will depend upon whether or not we have a preceding technical price formation to look at. Let's say a technical price formation to look at. Okay, if we have this triangle, that would mean that we're happy with having this right here. Now on the 30-minute, we seem to have this triangulation. You guys would agree with that, correct? Okay, everyone sees that. That's very easy. You guys are definitely that good. I know you see that, right? Even though it's not that clear, it's not that great. It's just another, kind of it's triangulation. Let's go with a bull pennant, etc. It looks like a bull pennant. All right, if we go to the hour. Okay, now I've been on the 30-minute for a while, guys. If we go to the hour, I guess we still have a bull pennant. Let's move this both of these over. Okay, we're going to make a mess of the residual of the chart, but I just want to make sure that we're able to see the price action. Okay, let's zoom in and let's look. Yeah, I guess we still have that, but you see what starts to happen? It was a pretty clear bull pennant, wasn't it? Yeah, it was a pretty clear bull pennant. And now all it's turned into kind of a wedge determined, a flag operative. I mean, this is why things they get. I don't want to call anything. Nothing's like it's operating as a flag essentially, not a flag operative, but it starts to operate as a flag, some sort of a bull flag. But you're losing the character of the structure between it being on the 1 hour, the 30-minute it being a nice pennant. Now it turns into kind of a channel flag, etc., which has a real unclean kind of breakout. So it doesn't look. That's not real reassuring towards the fact that we should just use this. And the point is, if we're on the 30-minute, okay, we're already dug back down into, just remember at the 30-minute, we're dug back down into, okay, into this kind of level. So we have kind of a clear initiation of the trend, right? A clearer initiation of the trend, I'll say that. You see the initiation of the trend would be, it's a long story here, or a short story made long, but I do want to include it, because then our breakout is here, right? And that is kind of the initiation of the trend. Okay, so that's important for purposes of stating that yes, we're going to draw this Fibonacci, because everyone wants to know, where do you draw them? How do you know? Where do you make these determinations? Some of these determinations are going to include whether or not you're going to draw it down to here. Okay, that's a big determination when you do this. Changing the time frames, I always say be careful about the time frames. Sometimes it's going to affect the actual pattern that you're putting together. Okay, which is going to affect whether or not, again, whether or not you would be willing to include this price action here, or you're going to need to move it to the left, or move it potentially even up, guys, if you're going to move it potentially even up. And this is, it sounds like not a big deal, but you're seeing the actual formations that are being traded actually change. Okay, these formations in terms of the preceding price action are changing. So the initiation of a breakout, or the initiation of a trend, let's say typically from a bull pennant, you would say yes, the trend initiated upon the breakout from the pennant. Okay, upon this breakout from the pennant, we're going to say yes, we like that theory on the 1 hour. Now we don't have a real pennant here on the bottom. This is the problem. We go into a flag instead of the pennant. So there's some kind of cross indications. To say it gets confusing. It's the time frames are sending you mixed signals. So if you can't process it fully, you're probably not supposed to be able to process it fully. That's why there's a difference in the way in terms of the information. The data sets are not how do you say, they're invalidating, okay, the previous data sets. That's what we have, is an invalidation of the previous data set, and that's not exactly welcome in terms of our being precise on the question that we're essentially answering. And that's the right question again to get into, is what price would it return to? What are we looking at in terms of a return on price? What's the new low? What's the level of support? That's the right question to ask. Where would you enter now, given the fact that it's just increased? If you're looking at getting in, say this is the first time you ever got in to Dogecoin. Now let's look at the price action that is occurring here. Let's see, as we also talked about the possibility that could be a stutter step or a dog leg. Let's go back to the 30-minute and let's look at that. Now, with the understanding that now it looks like it's recovering, it could continue to go up, right? If it does, that's phenomenal if it continues to do that. In the meantime, and that's, I guess, what we would look at is how much of a, what is your tolerance overall? Do you have, what are your goals? Are you happy with the 20%? Do you need more? Are you going to ride this out? Are you going to watch this all night? Some of you may just say, man, it's Friday. I got to tell you, it's Friday, and I'm happy with 20%. That's it. I'm over. 20% is fine. This one was about 20%. The preceding, I just made 20% on this one. I just made 20% on this one. And check it out. Within the previous, or that was that 40%, 40 to 50%, 20%, 20%. Some of you just doubled your money literally within this time frame. Potentially. That's a big statement. But if you hit this perfectly, which I know a lot of people did, that's 40%. So if you made the 40%, what's 40? We'll have to do the math here. Let's say 1 times 1.4 times 1.2 times 1.2. There we go. I did that wrong. 1 times 1.4. The way that you do this, guys, is just kind of how I'm talking this out. If you take 1 times 1.4, that's your first level, times 1.2 times 1.2. Those are the two 20% right there. Yeah, that's the same. Okay, that's doubling your money. Some people have doubled their money from here. Okay, sold out, and probably done better than that, I'll tell you that, have doubled their money in this period of time since, let's say in 8 days, in about the last 7-8 days. Some of you have doubled your money on this. That's very impressive. Good job, guys. That's nice price action. Okay, so it does make a difference when I'm sitting here redoing the time frames, talking about a bull pennant versus a flag versus kind of an indicator, excuse me, on where you guys want to place your re-entries. This is just, you've already made some decent money, and again, you don't necessarily even have to be playing with huge amounts of cash. You are seeing that, it's just kind of nice to double your money in the last week to 8 days. That's nice. That's very nicely done. For those of you who have competitively been trading this, even if it's not perfect, it kind of makes it to the point where your tolerance on this one, honestly, your tolerance on this trade is really kind of chilled out, isn't it? It's kind of relaxed. You don't need to. Now, if you've doubled your money in and along this, this played out very well. The golden pocket played very well. You dive down to it. We called this, guys, live. We literally called this live into the Discord in terms of this being essentially the target area, that this is going to be the entry spot right here. It was just the math that told us that, but it was falling off the cliff. The sky was falling. We literally called this as it broke through it and said this is going to be the key area right here. Was that 1942? I'll never forget that. 1942 or 1980, what was it? 19 something like that. And we have that on the Discord. We can bring up anytime. We brought that up as things were following through, and if you look at the candles, guys, it was literally pounding through. And I'm like, ding, 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 this is our price. I don't know if all the exchanges got down to this. Some of them did. I'll tell you that we called this price out. That's what held, and ultimately rebounded. So that was a beautiful rebound and a beautiful call, and people wound up, yes, making making good cash, and they were like, wow. I was like, yeah, it's just what the math told us, right? But that was, of course, that's what the math told us. Like the whole sky was falling, right? Everyone was like running for the hills. I was like, no, this is it, 1942 or whatever it was, 1948. I think 1948 was the price that I sent out to the Discord and everything else. I was like, all right, 1948 it is. But it was indicated by the levels. It wasn't me. It was just the mathematics, of course. So 45%, gain there. That was nice. And then I think some people cut out in around there. I know they did because it started to fall off. So you took some profits. Things recovered and people bought in at a lower level. I think they saved up to a maximum of, as you look at this, saving a maximum of 20% on that, and writing that up in, along to, as you look at this, really this turns into more of a gain of, for the individuals who wrote it correctly, of 50%. And from this entry spot up to here, so this is 40% and 50%, guys. So that's already, that's nice, guys. 40% and 50%. That's already, you're looking at what is that? That'd be like 140. Let's say $100 turn into $140. 50% of 140 is going to be 70. So you're already at double your money just by this point in time, just in this time frame. And Charlie Abbott asked you, what do you see another 5x? This is how things multiply up very quickly if you're playing them right. So the right way to play them is to potentially involve yourself at these levels in the retracement to liquidate when you have a higher price. But when you reach your threshold, okay, the golden pocket's going to be a big movement. It's going to be a big move. Typically, it's called the golden ratio for a reason, guys. So heavier amounts of money at that level are typically expected. That's just more money sits at that level. That's a fact. That's kind of a fact. So as we look at this next level, the question becomes, you guys were just involved in, kind of a nice run up to get here. We have a little differential on the preceding on the 30-minute versus the 1 hour time frame. How do you resolve that? Maybe you just leave it kind of nice and say, let's treat this as our breakout. Okay, let's go ahead and treat this as our breakout. I would always draw it on the lines. I would not draw it on the candles. Now again, if this decides to kick up, and it looks like it could, do you want to dig into the minute, the 3 minutes, or the 1 second and actually look at this and trade this all night? Some people do. Some people decide to do that. For other people who just cleared major cash at the golden pocket, and honestly, they may have 3 or 4 golden pockets lined up on 3 or 4 different alts within the next 3 or 4 days. That happens, guys. People line this stuff up. And that's kind of a strategy that people use, one of many strategies to maximize your gains. Now, again, on this channel, we try and maximize your gains, bring you accurate information. So let's deal with this issue at hand, and not to belabor the point if we've taken a long time to discuss it. These are the types of considerations which go into things like this, looking at different time frames, looking at the preceding intervals, discussing what's your tolerance right now. Are you already out? Is it going to go back up? The whole discussion changes if it decides to kind of kick, like the dog leg that we brought up earlier, if it does that. If not, we're relatively okay. We're relatively certain in and around this area. Let me move this just back here for a moment because I need to focus on this. We're relatively certain that we're gonna be okay if we choose this. Okay, is it perfect? No, it's not perfect. It's kind of an imperfect scenario because we have differences on the such differences in what the program is telling us, the price action's telling us in this specified time frame. So we can essentially create kind of the channel action in and around here, and we just have kind of a tightening wedge. It's not exactly it's almost like the pennant, but not exactly. So the construct fails us a little bit, which I'm not wild about that. So the things like that bother me. Okay, that's just clearly that I like to be so precise. That's very important for me, and that's how you achieve and maximize your gains. So we have this rough pickup out of this area where we're trying to conquer this previous high, and I'll say that with the candles, guys, you didn't even get over the previous high until this level. This is why this gets a little bit choppy. These waters get a little bit choppy because the preceding high was right in and around here at that 34.7, right? So that at that 34.7, it becomes kind of a little bit more of a mess, and it looks like it stuttered to even get through that area. So really, it's just this is not ideal in terms of kind of seeing like what's the ideal kind of reaccumulation for people who haven't accumulated. Our typical strategy would be if this decides to continue to kind of retrace here, and it's gone through a little bit of a step, 1 or 2. We can get a little bit more Let's go into like the 3 minute. Let's kind of see just what it's wanted to do. We can get a better picture. As you guys go deeper in, to the different time frames and get more specific, we get the micro lens out, and things become a little bit easier to kind of, see exactly what's happening. This is where you can start making like little kind of nano trades, yeah, let's see if we can pull this over. If we can pull up and we don't need to pull all the way up. A lot of times it's difficult because you have to redraw your fibs. You guys know that on the different time frames. So we'll redraw this fib just so we're right in here, tucked in perfectly. And, I'd say I'd want to see the candles to see whether or not it actually came in touch with this level here. I'm going to right click and I'm going to move over, okay, from the right to the left, the actual amounts here, and I want to see if this touched down to that area already. That would be interesting. Close. It did not. Okay, so it did not do that, which is maybe making me think, honestly, as I do a gut check on this, making me think, is there any kind of room to the upside here? I wouldn't want to draw it to that. I just wouldn't want to make that decision to where I would want to draw it up to where it just came in contact with this area and decided to rebound. Could I have? Yeah, I mean, I could do that. I could draw it that way in the midst of kind of this lengthy, kind of difficult scenario here to the left, where it's just we have a dual. We have cross indications on the 30 minute and the 1 hour. There's kind of some cross indications. This is about the level of complexity I'll go to get involved in a trade and to lay out exactly the levels that I want to get involved in. And it's just it's a sophisticated approach I take, and I'm heavy into the mathematics behind this. So as I'm looking at from a generalized sense, let's just bring up from a generalized sense, if you ever want to match up what you believe to be kind of a legitimate number and a legitimate hit upon a fib level, sometimes you can do that. If you have cross indications or things a little bit messy, you may want to get into that. Okay, you may want to try and do that to where you have a greater probability of hitting additional levels. Maybe you've missed something. That's probably what I would say, is especially if you think you've missed something. Here it seems like we haven't missed anything. It seems like the program has missed something in between, and for whatever reason, the price action on the 30 minutes showing different indications and different formations than on the hour. That's kind of standard, okay? As you get into these into different price actions, that just may happen. So let's just do that. I'm going to do that right there and let that hold. And it doesn't look like that exactly got picked up at that first level of the 38.2. That's okay. I'd want to see this pan out, and I might adjust my levels just slightly. Getting into this now, I might just slightly adjust my levels, okay, on this. As we're looking at these different levels, I'd like to see this continue to retrace. I think it will be in whatever zone it will be in for a while. Okay, it may continue to go up like the dog leg that we originally showed. That's apparent in the other price action. If it's not, okay, I'm going to just bring in the trusted old idea. Let me see if I can zoom out on this and just provide kind of the basics of what this whole strategy looks like. And let's just zoom in here. We can do this now. We can get into whatever we need to get into, and we'll try and clean this up and provide the right kind of strategy. You guys remember these the figures that we had? This and actually I can do this. I think we have this. This is nice. Okay, this is a 1x, 2x, 6x, 18x, and 54x. This is from a previous video. If you guys have ever seen this, it keeps light money on the top, guys. How to buy into crypto without overpaying. All this does is try and convince me, whenever I look at this, that at whatever level is high in here, I do not need to be heavily involved on top. Okay, if I have $1 million on the bottom, I've got about 1%, 1 out of 81. Okay, this all adds up to 81. Okay, and your figures may be anything, but I always try and make sure, as sure as I am able to live, eat, and breathe, I do not want money involved at the top levels. The red zone is the red zone. I don't like the red zone. That's just it. I'm not in the red zone. Period. Never. I'm never in the red zone. All right. I get into the other zones, at a level that's about a 1x. When it crosses over into the green, I'm at about 1x. That's just the truth. That's what goes on. Okay, so that's the approach, is a 1x in and around this level and around, and you'll be able to see the kind of the nature of this here. in and around the 35,362. So the answer to where it will go back to, I'll just state the answer, okay, is it can go to any of these levels. If it goes down from this, and let's tighten this up a little bit, if it goes down from its current position, it's high, and guys, it can continue to go up. This is an example of what will happen at the higher level if it does. It's phenomenal work to go through and practice. But limit orders just immediately being calculated, and bam. That's just essentially, let me get my other keyboard, excuse me. That is essentially, what will be done is calculations will be made, and it will literally, other keyboard was behind me, excuse me. So, on down through the 38.2, the 50%, okay, at the 34, we have the 35,362, okay, then we have the 34.68. These are prices, 34 cents, 34 and 6/10 cents essentially. Then we have the 34 cents, 34.36. Then we have the 33.588. Then we have the 32.808. So you guys can copy that, you can screenshot, you can do whatever you want to. Those would be my off-the-cuff instant figures, except for the fact what? Except for the fact that now we're going higher, right? So that would be the question, is except for the fact that now we're going higher. So in the context of that, what I would remind everybody is that we talked about in the beginning, this dog leg. So is this going to be a dog leg? I don't know. It could be a stutter step into just a little bit of an incremental higher, incremental higher, what do you want to call it, interim high, let's call that. But let me get this out, and let's just talk about what is that dog leg that I'm talking about. Let's just resolve that real quickly. As you look in and around this previous price action, we're on the 1 hour right now, I think that's okay. But as we look at this, you'll notice on this leg up, it took a stutter step, right? It took that little stutter step right there. You see that? And it's not exactly to that degree, more or less. You see that? It's kind of a parallel little channel that's created there. So yeah, that's more or less on. So as we look at that, even down to the distance it was, as we look at that, we would say, is this another one of those? It kind of appeared when we first put it there that yes, it may be. In which case we probably have twice the amount to go. If that's going to move the same way the other one did, you may have up to, if it's going to repeat exactly, up to another 9% on the move, if it wants to break through and move up like that. That's the kind of analytics you would want to do if you wanted to scale out some. Guys, you're getting into the point where, do you want 20%? Do you want 30%? Do you want 29%? Do you want 25%? I mean, what's your threshold? When you want to make a positive trade, if you can make 20% 4 times, you're going to double your money. Okay. Now, in the context of this, you have to realize that you can make that without much retracement. If you're going to get into just a sideways trading channel, and really all of your retracements are going to amount to, let's just look. If your retracement's going to be about 10%, maybe you save 10% there. It's kind of rough. If you have a retracement here and it lets you get in at the lower amounts, that just tells me people had at this lower amount here that it was a 16% drop. People flipped that and wanted a lower price. People may have flipped this. Not many may have wanted a lower price. A lot of people may have held through this. If there's a bulk of orders there, I kind of find it difficult to believe that the market maker is not going to come and pick those up. I just have to say that I think if there's enough action there, the market maker, he has no incentive to not go pick them up. So the fact that you're peppering in on top, et cetera, that keeps the price in kind of a very bullish trend. I'll say that, and that's what's needed right now. It's needed. It's necessary that there be kind of a nice bullish trend to things, and we'll just have to see. Is this going to work out exactly as it was drawn on the other? Looks pretty close, right? It looks pretty close. So we had already drawn that out, and it looked pretty close then. To the extent that wants to show itself through, that's kind of where what we're going to be kind of looking at. So we would take this, the effect of that is we would literally take this, and let's redraw this a little bit here. But this Fibonacci is going to apply to whatever that new high is, and we hope that new high is just literally through the moon. We hope it is so high, it's just great. we've been waiting for this thing to move all day long. So it did move a little. It started to move a little bit, but it just stutter stepped kind of in around here. I'm like, are you really going to do that? You know, everyone's looking at it like, seriously? Like, you're going to break through this channel. You're going to show us some positive direction. And then, you know, you're really going to like a stutter step here. Like, this is not Doge. That's not Doge in action. So the bottom line, it just seems a little bit defunct. And it's like everyone wants just to take 20% and do what they want to do with it. Now, if you're out of the 20% and you're trying to, you know, you're trying to say, well, is it really going to go up maybe another 8% on the analytical on the previous zone? It's possible. It could go up another, you know, potentially 8% there. And that's just that's the way the cookie the cookie crumbles. That's the way the cookie crumbles, I guess, as they say. So I'm not sure that that's exactly going to happen. These are the types of decisions that you make. If you're out and you've already doubled your money, you don't care. If you've done that and that was your threshold, you wanted to hit 20%. If on every trade that you have, you are secure and sound and happy and healthy and wealthy because you literally just want 20% on all your trades and you calculate them up very well, you know, that's great, guys. That's exactly that's what it's all about. You're spending time with your family, your friends, maybe your kids, and that's just your threshold. That's what you want. Then these questions don't bother you at all. A lot of people just want 10%. That's fine. I'm just going to make 10%. I'm going to reaccumulate it. Whatever phase comes in here. All right, whatever it wants to decide to ultimately dig down into, and I may pick some up right here. You know, that's another deal. If I'm out, I may pick some up right here. Yeah, I may go ahead and pick some more up if it wants to continue to go up or whatever it wants to do. I'll get some exposure to the upside, but I'll lock in. I'll get back in and just pepper in a small amount of money. If it wants to go back in, that's great. But I already locked in my full gain plus 20%. You guys see that? It's kind of an important point. If you lock in your gain here, 20%, that's my threshold. That's what I want. I'll lock in that 20%. Then I may flip around and say, okay, fine. You want to dig back into there? That's no problem. I'll just pepper in a little bit of money. No problem. No problem. So you can kind of work it on the way up as it wants to retrace and continue to kind of misbehave a little bit. This is kind of like a misbehaving kind of, you know, it's not something we would expect to see out of a really well performing asset. So I would just state that, and we can bring over these kind of guideposts. All these they're just guideposts, guys. They're not set in stone. They're not even something to really follow. I say do your own calculations. But what are they? They're just ideas that most of the money is going to be towards the bottom of whatever reaccumulation you're getting into. Because if it goes down one level, that's great. You say, well, what if it goes down 2 level? Exactly. That's why we double down our money. What if it goes down another level and retraces another level? Perfect. That's why we have, you know, we're going to triple down our money. If this is 1x, it's going to be 2x. If it's 100, 200, that's going to be 600. Okay, well, what if it goes another? Exactly. Then it's going to be 1,800. We're going to multiply that by 3. It's just a structured way of thinking. The numbers can go out the door, out the window. It's a structured way of thinking of the cash available at different lower levels to where we're behaving like an ordinary market participant. The lower the amount goes, the lower the price goes, we're willing to engage with larger amounts of cash. You guys get that? So we're acting normally within the confines or the context of a demand curve. See, as the price goes down, we have more demand. Okay, so at the higher levels, sure, we'll pepper in a little bit of money, but I'm literally talking about, like, you know, if it's $1 million, it's $10,000. And that's some money. You know, that's some. That'd be 1 over, let's say 1 over 81 if all these added up. If this is 100, 200, 600, 1,800, and 5,400. Essentially, that's doubling, then tripling down each level. The 2 double down is 600. The 6 double, or I'm sorry, yeah, is the 2 triple down is 600. The 6 triple down is 18. The 18 triple down is 54. That all adds up to about 8,100. This is an example. That's all it is an example to keep people's mind in the game that if they enter in, it should be at a light level as long as it's still kind of near the red zone. Okay? That's all that this is geared towards doing. If you have a better scenario or a better kind of synopsis of what would be reasonable in terms of keeping your cash available for lower levels, because we know anything can happen in the market. Dogecoin's been very bullish. We like that, but that's what we try and do. And this whole deal here, it's just the whole triangle. I had that out earlier on to talk with someone about. Yeah, there's more cash at the lower levels, and at the higher levels, there's nothing available. As we get down into these lower levels, then we start to spread some cash out, larger amounts of cash. We pick up more coins at a lower cost. All right, our cost basis goes down. The cost per coin goes down. That's what we want to achieve, even on these little micro elements. Even as we look into this, we want to always be diligent and achieve that. Now, see, with the exit here at the 20% threshold, guess what's already been programmed and already happened? Well, if it goes back up, we're already involved at a light level. Okay, light level. Some exposure is fine. Some exposure is fine. There's nothing wrong with that. It's still making money. See, it's already up 4.5% on some amount of money. And that's okay. It's not a huge amount of money, but then again, it's been locked in at 20% with all the capital reserves, so your risk is gone. You've made your 20%. That's your threshold. Okay, on this last trade from the movement in, and again, you say, well, then you wouldn't have any money at the higher levels. Well, on this one, this got back down into the 50%. All right, so it got down into this mid-level range of retracement. So that was a heavier line of a heavier amount of money. Okay, that's if we look at this previous one in terms of the acquisitions, this one got down into, let's say, the 38.2 to get down into the 50%. Real close. I don't know if you got picked up or not. Yeah, you did. You got picked up right here at the 50%. Okay, so you look at that price action. You got picked up twice there. You may have gotten picked up again here. All right, so in the meantime, you guys have you've made money. Potentially you made money here. The amount that you would pepper in around these top two levels, let's say this top tiered level, and that got taken up here. Now, it wasn't the full amount. It wasn't. It just wasn't. You also didn't have any risk of getting spilled out to the downside. None. Now, could it have happened? Sure, it could have happened. Did it? No. But if you're trying to minimize your risk and you're trying to maximize your gain, and then you talk about, well, maybe it'd just be better to hold. Well, if you just want to hold, that's great. You know, the only problem with that, I don't want to see the amount of any of my friends' portfolios go from 100,000 to 50,000 that I talk to about getting involved in Doge or anything else like that. I mean, that's you know, everyone's going to hear some kind of an idea about protecting your profits and kind of being reasonable. At this point, people have made a lot of money in it. Yeah, people have made a lot of money in Doge so far. It's kind of nice just to kind of, you know, dabble with things, to go ahead and play your moves, your big moves, kind of with a heavier hand, right? You know, the heavier amounts of cash typically get involved in golden pockets. Okay, it's closer to the bottom. It's a 61.8% retracement. So of course you're going to have heavier cash towards the bottom, right? And that's just part in line with the demand curve. As the price drops, okay, you're going to have more demand. So this is all just real kind of classical economics, business framework, business thinking, guys. It's just real simple. A lot due to my background, etc. It's just what I've been involved with finance, etc. for a long period of time. Started right out of Duke University. So that is essentially the deal. So if I really appreciate the moderators here. I really appreciate all the hard work that they are doing. And that is a great thing to see. And let's see kind of what let's do if we need to do anything else. Let's see if we need to do anything else in the moderation here. You let me know in terms of what needs to be done, and be happy to. I know you guys are fighting a war in the. I'm sorry, just look down. You guys are fighting a war right now in the actual. Chat down there. So very interesting. You guys are now owning Doge is now better than snatching ticket or lottery tickets. Yeah, it's worked out well for people. People have made a lot of money, and yeah, just I'm not sure what is going on in the chat. We got some guys hard at work. So yeah, good job, hard at work guys in the chat. Shout out to Oz007. And I just appreciate all of the hard work that all you guys are doing. And anyone else who misbehaves in the chat, you get reported to YouTube. Do you know that? You get reported to YouTube. So we go back through and we collect all the names, you get reported to YouTube. So that's not fun. So if you want to be reported to YouTube, you do whatever you need to do. So that's not nice. Let's see what we got in terms of a comment. We can look, but you guys do understand. I appreciate all that work you guys are doing. You know, Oz, you are the man. That's our Australian like, you know, dynamite in a. He's a dynamic kind of guy. You guys would like him a lot. He's just great. He's in our Discord and everything else. You guys follow that link if you want to. You'll find some good people. So that's how we would reaccumulate, brothers and sisters. That's how we would do things. If it wants to continue up, if your threshold is 30%, you may hold on for that. That's great. Okay, you may continue to do that. People who got out at 20 and used the system are already back in with essentially house money. At this point, you're in with house money, and at some point along the way, as you get into this, you're going to be doubling essentially what's already house money. That's what you need to look at, is you're going to get into the standpoint where the house is, you're going to have multiple levels or multiple stacks of essentially what's house money. So just let that compute and kind of sink in that essentially you're trying to create these extra stacks of cash that, these up, and when you do a 2x, that's an extra stack. Okay, that extra stack goes in and maybe plugs in at this level, in which case, you're able to kind of regenerate up through here. If you want to play on through something else at a heavier level, you can. Otherwise, you put your principal back. You tuck it down at the lower level where it belongs, and we continue forward. And it's nice. You play around at a light level. You wait for these golden pockets. And guys, these golden pockets lined up this last week. What were there, three or four golden pockets with like 40, 50, 60, some 70, 80%. It was like, hello. It was quite a week, guys. This last week was really phenomenal. So in terms of holding on, wanting a 20%, your threshold may be real low right now, just on playing it's not an inconsequential level, but that's my answer. I'll go ahead and say that is my answer in terms of how low will the price go. It's going to go to a retracement level. And at whatever retracement level that is, it's going to offer an opportunity for anyone who's outside of the market to become re-engaged with the market at hopefully a scale that is an increased amount or multiplicity, okay, a multiple scale, or essentially some sort of a greater degree. I mean a degree, not just a smaller amount, but a greater degree of cash at the lower levels. That's a reasonable interpretation of what a demand curve is. All right, that just means as the price goes lower, there will be more demand. All right, not a penny more demand, not a dollar more demand. Typically, there will be more demand. The biggest guys trading crypto on the streets are saying at lower levels, we are ready to double down. Okay, so on the micro here, it kind of affects your, and you'll have to look at overall what's your cash position. Do some people have backup? Some people don't have backup. I'm not going to play a game unless I've got backup, and I'm always going to have backup. So maybe I'll always be playing the game. That's what I hope. That's I enjoy it enough, and you guys know that. I think you do too. But that's the idea. I'm not going to play the game unless I have backup. Cash backup, and I always have cash backup. So that's the point. I'm always going to be playing the game. That's what we want to get involved with. I like that approach. I hope you guys enjoy that, and I hope you guys understand the framework as you look at this in the scaling in. Essentially, the scaling in. Look at this video when you do have time. How to buy into crypto without ever overpaying, right? Because you're scaling in the whole time. Everything is kind of gauged. This 20%. I think that 20% is beautiful. I think that's great. That 20%, it's re-engaged already here. That's fine. That's great too. Now it's kind of the house's money just traveling up, and that's beautiful. If you got $100 in here traveling up right now, you just pocketed 20%, and on the total you made potentially up to 2x in the last 8 days. Hey, who's going to be mad at that? You get to let your $100 ride up. I'm just curious. You'd let your $100 ride up while you decided to go to bed, relax, not be stressed out. You had $100 left in the game, or it was 1,000, or maybe it's 10,000 on a million. I don't know the figures. That kind of general ratio I like. But you'd be able to sleep well knowing that you made the 100 on top of the 2x, all on the house's money. That sounds like a very successful trader to me. Okay, that sounds like a very successful trader. So, I like that a lot. You guys, I hope that computes over. That's a heck of a strategy. If you can accomplish that, and you can demonstrate that to yourself, you're going to be a happy man if you can operate your account like that. So, that makes sense. 20% on a heavier amount of cash. Yeah, you want to kind of take that and let $100 ride up. Why not? Why not? Or maybe the ratio is different from you. Maybe you want to back out the position. And the problem is you're going to want to take enough out to where you protect kind of your gain. If you don't want to watch it all night, or you have a different threshold, maybe you just want to let it go. You say, well, there's going to be another step. I'm going to say there's going to be another step. That's fine. In between the different steps, how high are you going? I don't know the answer to that question. Let's hope that's not the high here, because that step to step there's only about 7%. So let's hope there's more than a 7% gain here, okay? Because at a 7% gain, I just don't want it to threaten your 20%, previous 2x, etc. Just if there's a lot of capital involved. So I always look at an issue like that, and it's just that's the way I'm kind of geared towards putting investment packages together. Guys, I've done this since I was right out of college at Duke, right? $1 billion equity fund, like right across the table from, we were working across the table from Harvard Foundation. Had to be extraordinary calculative, guys, in terms of our figures. They had to really match up, and I'm saying, perfectly. Harvard was very specific. I had to do all the numbers for them, so it was kind of a pressure cooker of a deal. Got it done. We slam dunked out when it was a nice one. So don't know what all we got going on in here. Let me make sure I answered the questions in here. If you guys have any other deal, everybody put your favorite. If you would put your favorite altcoin, if it's Doge or if it's Harmony One, whatever it is, if you would put that down in the comments, I think that'd be great. Adam Beach, I want to make sure that I answered your question. It's going to depend on the scale of both, and that scale is going to depend also. I hope I gave you a very thorough answer in terms of where you draw that, where you draw the base. Okay, in terms of your Fibonacci. Okay, so that's just that's real crucial, and we really appreciate your contribution, Adam, and also to Abbott. We really appreciate both of you guys. Now, what is this? Crypto headquarters. We love that. Crypto with a K. Love that. Starting the trend. I love that. What's going on, brother? What is up? I love that. Thanks for the awesome stream, London. You're welcome, brother. Just wanted to ask, in the future, if you could cover the best tools, tactics of TradingView on drawing graphs. Nice. Yes, that is a great idea. I'm going to screenshot, and you are the KR that just popped up there. I need to slick this thing up a little bit, so I will do that. I'm focused on the TradingView. I'm not real focused on the interface for the video, but I'll get more focused on that. So thanks for the awesome stream. So I've taken a screenshot of this. I'm also going to make a note of that because I think that's a very valid point. And let me bring over kind of a legal pad, and I'll just write that down. Giving me some homework to do. I think it's good though, because when we make videos like that, etc., then people are able to really recognize, and they're able to refer back to them, much like this other one. Because guys, the math involved in this one is really great. The how to buy in to crypto. You'll see it repeated, what I'm talking about right here, and it's done. Enough math is done there to where you shouldn't have to do much math, and it's just it's nicely. It's delivered in a very nice way. So yeah, I hope you guys appreciate that. About as professional as I could do on the fly, but I'm going to write this down for Crypto HQ. Crypto HQ has a Twitter, and we like that. We love that. That logo is awesome. It is really nice. Okay, so you want something for cover best tools and tactics for, let's see, for TradingView. Gotcha. TradingView on drawing graphs or charts. Absolutely. And that's one thing we also do. I do spend time on that. It's a real dedicated, hey guys, it's a dedicated time period. It's a different kind of deal. It's kind of an overall program that we do with certain like alpha traders, people who are really involved. And we do sessions. It's kind of an involved deal that we do off the beaten path with Discord. But that's an involved kind of, big investment in time and everything else in your actual, from your lives. I know a lot of this is time you're spending, but that's some rigorous work on some different coursework, etc. Really kind of a preparatory, in line with kind of my previous function as kind of like a mentor in a intelligence school. Actually, I was a mentor. Cool teachers from like CIA and FBI were in the school. It was pretty cool, so they chose me as a mentor. It's because I did real well in the school. But it's kind of interesting being around some of those people, or being in the same classes, and the teacher's like former CIA, and I'm like, yeah, I'm the mentor in the class. I'm going to teach you everything she knows. No, I'm not. I don't know everything she knows. So I've had to deal in those circumstances quite a bit. But yeah, I can definitely facilitate some advanced learning for people who are extraordinarily brilliant. And you guys are very you're very brilliant. You're a very intelligent crowd. So yeah, I've been able to do some of that in the past. So look forward to doing more of that in the future. This is it's looking nice. It just looks, it's so smooth. It's just, it is what it is. If it wants to continue to go up, again, whatever your threshold is, and that's not the answer people want. Honestly, they don't want that. They want the exact figure, because I'm able to give you guys the exact figures. Okay, the exact figures on the retracement. You understand? You get the exact figures down to the golden pocket and the levels below and the levels above that things go to. Right? That golden pocket is just hammered in there, right? But in around the midst, you have the levels up above. So you want the exact exit price and how high it's going to go, but you don't want to deal with the other fact. If there is more money on the downside, okay? If there's more money on the downside, you guys have to understand this, please pay attention. If there's more money on the downside, okay, if it's doubling and tripling down as you go down to the different levels that are represented by the, I think we can move this thing over like, not like that. Let's see, would this move over? No, we want this over here. I want to pick up this and move this over there. Let's do that. So as we look at more money being available in multiples, okay, as we step down and double down or triple down, okay, we double down and triple down. You want an exact figure on this, right? Exactly where is it going to? People like that. Well, I'm able to give you those exact prices, right? Those exact indications with the Fibonacci. I can do the same thing on the way up. It's just instead of having, more money on the way down, you're going to have less money on the way up. Okay, and that's the real way to play this if you guys want to get into the details. And I don't share all that on this channel, kind of on the basic, but I'll go ahead and tell you, if there's more money stacked on the way down, there's less money on the way up. Okay? So that's the real easy solution. I haven't mentioned that before. If you have more money on the way down, you're doubling down, you have less money, probably a multiple of less money that's going up. Okay? After you've locked in your key target. So that's just that's the truth. That's kind of what makes sense to a lot of people. They want to call it laddering in and out. I don't deal with concepts like that. Typically, if they're not in a real good business book, and I can't find that well structured in a business book, that's not in any technical analysis book or anything else like that. It's just a technique. So you guys use the technique that suits you the best. And yeah, that's essentially what we're talking about is kind of more money, doubling and tripling down along the way in. So you're relieving your position along this way up particularly once you reach your threshold. With the 20% out, you're probably keeping a portion in case it does continue to go in. But it's about this heavy, right? It's 54 out at a level. Then it's 18 out of level. Then you have, if it decides to go up, you've got 6, 12, and kind of that 1% chance it wants to just kind of take off. So this is reversed. These figures are kind of reversed, if you will, and that's a long journey to get to that point, and it's just a whole nother discussion. It's kind of a lot. So let's look at Doge is just up 7%. That's nice. Everything else is kind of let's see what on the aggregate. It's at 36 and 36 cents. That's nice. Not too much is doing too well. Doge is at the top of the leaderboard right now. That's what we would expect. We would expect Doge to be on top. So we appreciate having the opportunity to see that. And yeah, it may be up 40-50%. So we would like to see that. It may stay real reasonable. It looks really consolidated. I'm going to say that right now. It looks really consolidated. I don't know if you guys see that, but it just looks. It looks really consolidated right now. I'm not sure why, but you guys see that, huh? It looks almost like it's almost frustrating out into something like this. I don't know why. It's just kind of pushing sideways into something that's, it just doesn't look like nice, smooth, this and that. It's very tight. I don't know how to best describe that, but it just looks like it's consolidated, and it is. You guys see, and now it's starting to roll over. That's the look that I was getting right there. Because we have that dog leg, and then we have this straight hammer sideways. So could that be the top? Sure, it could be. Could it be just another move up? Sure, it could be. The one thing about this trading program is, as you guys look at it, you'll get into it and you'll realize, like, man, the chart just changed on me. You'll see this stuff. It's like it was going. It needs to go backwards now to fix this problem. Because sometimes it's like you'll have this nice, great pattern figured out. That the live pricing, these live lines, guys, they will throw you sideways. That's why it's nice to watch candles. When you watch the lines, you're like, hold on, this whole thing just moved in a different direction. So just be aware of that as things are stutter stepping around. And it looks like this is just the immediate price action of what's going on. Has it is it tagged out? Is it completely on lockdown in terms of it won't go up anymore? No. Can it? Yeah, sure. But find your tolerance and find your way in life and exactly what you want to do in terms of scaling out. If you want to do that on the way up, For right now, it represented a 20% hit from the low position on the previous price action. We will go ahead and do those videos. I want to just thank everybody for being here. I want you guys to hop into the, I'm probably going to hop into the Discord for a little bit and see if you guys have any specific questions. Hopefully I can answer some of them. And I wanted to jump back on tonight just because we said we'd do a pre-launch party. And hey, we got into 20%. That's okay. Now you're up 7%. And again, guys, none of this is financial advice. It's not, I'm not your financial advisor. So that's just it. If you guys would like to talk to one about crypto, I'd be interested in knowing which ones handle crypto. That'd be interesting because I don't think any one of them are handling Dogecoin. So maybe we want to meet some of those guys if they're around. And that's it for now, you guys. I want you to have a good night. We'll come to you and we'll stream tomorrow. I appreciate you guys being the technical group that knows how to get stuff done and are willing to challenge all this intellectually. And it means a lot to us to have you here. And just thank you. We have over 5,000 subscribers, and we just appreciate that because it's in a very short time and it's organic. You guys are a smart crew, so do that. Go ahead and join our Twitter as well for those of you who may be late to the game, and go ahead and hit that like button. I'm not sure how many of you have, but as we're closing out, you can type in The Kingdom, and you're gonna have to type in here, you're gonna have to go to the